Well, team, we got another stock market movers for you. I'm excited to get into today's show. There's so much to talk about. Will the Bulls hold the wall? Shield wall is on right now. It seems like we can't get through those pre-market lows. Will we go leaking through there towards the close? Find out right here on Stock Market Movers where you should be looking. Where's the rotation? What is hot and what is not? Where am I taking swing trades on right now? You guys check it out right here. Stock Market Movers got a lot for you. Hit the like button. Let's get it started. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, team, let's get into the markets. Let's take a look at the overall market action right now on the 15-minute. You guys can see we've tried to come back up towards the hourly resistance multiple times now and not being able to get through that hourly resistance. We'll see if that starts acting as a topping area. Of course, you guys know I'm looking at the 420 space to see if we can get up there. I've been looking at that for a while. I actually created this on the 23rd. We're now on the 3rd, right? We'll see if we get back towards that 420. That's where I can feel a little bit more into that extended bull run. We'll see what happens. It seems like we're fighting right now to try to get back above 415s. Let's go to the 5-minute. You guys can see how the SPY just recently started taking a downturn here towards the 413s. Let's take a look at some, of course, of our earnings stocks that hit the reports, right? 3 big reports all went down in the pre-market and the kind of the after hours yesterday, but then working their way back, right? If anything, getting all the way back. Google didn't get back there towards its closing price. I think that's an important level definitely to catch, and we'll get into their reports and what is good in their reports and what is not there. Of course, Alphabet missed on EPS, beat on sales. Something that we've been pointing to also is that I'm seeing this from the big boys. A lot of them are focusing more on meeting revenues than meeting EPS. Why? Because they don't really care if they have to get hit on their EPS, their earnings per share. That's like contracting of their margins, right? But if they're able still to make those sales, it looks like they're still getting the appreciation they need, right? Alphabet here came in with cloud revenues at $7.31 billion, up from $5.54 billion year over year. Google advertising was a little bit higher. They did say that they're going to incur a $1.9 billion to $2.3 billion employment severance charge, and also exiting office space reduction of about $500 million. So they knocked that down. But hey, you guys see it. They're figuring ways to get above the bar that's needed, right? And I think that's the important thing. A lot of these companies have lowered the bar far enough that they're still able to just slightly put it above. And that is keeping the stocks higher than most, especially if you're just focusing on the earnings reports, right? They're not the best. All 3 of them really weren't the best reports. If anything, on a kind of everyday type of market where logic seems to be in play, right? Where we're not disconnected from fundamentals, these types of earnings reports would knock these big stocks down big. The truth is, that's not what's happening right now. We're disconnected with the fundamentals. We're rising into a straight up, it seems like, a new bull market right now. That's what you're seeing out there, right? The only question is, will it hold? And will this just relentless buy the dip mentality stay in the market? Well, let's talk a little bit about that. Let's go to another major earnings report, right? Apple, you guys see here, it got hit. And what does it do? It actually goes back higher than the close of yesterday. And this is very, very important. If any report looked weaker, it looked also weaker to me in Apple more than Google, more than Amazon. You guys tell me. We'll get into a little bit of their earnings report, but Apple's report was by any means nothing that I saw strong there. Yet we're back through yesterday's close, right? Q1 EPS at $1.88, missing the $1.94 estimate. Sales at $117.15 billion, missed the $121.10 billion estimate. They did have their iPhone sales decline 8% year over year. If we look at their segments, right, they give it in North America, Europe, Greater China, all three of them down on a year over year basis. Doesn't make me feel confident that the demand is coming back. Also, Tim Cook now saying, of course, in the call, he said that now we're back to where we want to be and compared to Apple's production, right? They had disruptions at Chinese manufacturing sites that lasted most of December. And one thing to keep in mind, right? Apple hasn't provided any guidance since the start of the pandemic. I think this is something that doesn't get pointed out too obvious. And that's why I feel overall, compared to the big boys, I mean, look at the daily charts. Like Apple, Microsoft, Amazon, Google, these are different looking charts than I would say that Apple chart, right? That Apple chart has held up way stronger. The reason why I feel this has happened is for moments like this where they don't provide guidance. What did we get on the guidance there from Microsoft? It was pretty negative, right? I mean, it has been climbing the wall of worry right back. But that not providing guidance, I think, has actually helped Apple. Interesting to think about, right? Another thing I think is an important outlook here is looking into comments, right, from the CFO. The CFO stated that for Mac and iPad, we expect revenues for both product categories to decline double digits year over year because of challenging comparables and macroeconomic headwind. Another thing that I clearly see is the gross margin focus. One thing that you see now, gross margin of Apple expected to get towards 43.5. Before the pandemic, this was at 38.4%. So what does this mean, right? Well, this means that the big boys, at least from what I'm seeing, are focusing on cost structure. And this is also where the focus seems to be on a lot of companies when they're making those layoff cuts, right? And mentioning bringing those costs down, cost structure focus right now. The only thing concerned there, right, if they're going to be so cost structured focus, is where is the growth for such a high future earnings appreciation? Those are all questions that we need to start asking ourselves, especially if these companies are just going to be focused on cost structure, profitability, trying to get milk as much as those margins as they can to meet those revenues. Clear example also, well, I just talked about it with Google. Look how Apple also missed on their EPS, but also missing on their revenues. Not good signs. Normally, Apple doesn't miss. You look at their calendars and you can see how in the last kind of like 20 reports, there's only about like 2 or 3 of misses. So that just goes to show us Apple's not as strong, but that doesn't matter, right? Because the price action is telling us new bull market in Apple. And I've talked about this 150 level, how important it would be for Apple. Now, bulls have control again in Apple. As long as it's holding this 150 area, I think it's going to continue pushing. We'll see what happens there. Even on a bad report, climbing the wall of worry, right? That's what we've been seeing on stocks. Even on bad reports, buying the dip, coming right back up. All right, last one we'll get into before we get to our interview. Of course, Amazon also came out. Let's take a look at that price action today. You guys can see in the kind of the pre-market, we started coming back a little bit there on Amazon, but kind of been sideways here on Amazon from the open. Let's talk a little bit about their numbers here. Amazon's EPS also missing. Sales beating though at 149.2 billion. Beat the 145.45 billion estimate. They do see Q1 net sales at 121 billion to 126 billion versus a 125.11 billion estimate. They see Q4 AWS revenue at 21.378 billion, up from 17.78 billion year over year. So AWS still kind of growing. Another thing that you saw also in that Google report too is that you saw their cloud space growing also. Amazon CFO, though, stating here, Says that the company has seen continued slowness in Q1 for the year of AWS. Company is seeing lower growth rates in UK and Europe due to inflation and the Ukraine war. All things that we need to keep in mind. Another thing here, it was a big miss on EPS, 3 cents, missing 17-cent estimate. Once again, I feel that the companies are willing to focus on the revenues, try to meet those sales, not stress so much on their EPS right now. All right, getting out of the Amazon talk, we'll take a look at the overall market, see what we're doing, and about a minute or so, we'll get into our next interview. SPY continuing down since we started seeing that kind of crack at the 416. We'll look to see if we're able to bounce back. I've been looking especially at the hourly chart today. It seemed like we had this kind of, and you could call it a descending triangle, right, with the kind of support line underneath it. We'll look to see if we can get back above 416. Or do we crack the 410 today? If we crack the 410 today, that's where I think we could have a little bit of continued leak. And of course, that came from kind of that pre-market action where we got a pre-market low today of 410.84. Will we crack below that? And of course, why did we get these? Well, the non-farms payroll, right, increasing by 517,000, far higher than the 187,000 the market expected. I mean, the non-farm payrolls, what a report, right? Labor market's robust. I think you might have to actually find a new word for robust. It's incredible to see this report. And I mean, we looked at the unemployment also, and unemployment dropping further. So there's two outlooks, I think, that are very important here. And I talked about it on pre-market prep when the numbers were coming out, would be, is good news still good news? Or is bad news good news here? The confusion starting to really hit, I think, investors. Because there's some investors talking about what? Soft landing, right? Soft landing would be that, yeah, we don't break the labor market. We don't break the economy. And we get back down towards that inflation goal, right? Well, then this would be actually a good thing, right? Seeing that they're not breaking the labor markets and that the economy is staying strong. Well, there's the other narrative, right? That the Fed will continue raising rates until they break the labor market, which would bring the recession, right? And I think that everyone now has kind of the two kind of games here that they're playing, the two narratives. This is where it gets a little bit confusing because you have to kind of choose the narrative that you're on right now. And the price action is showing a soft landing. The headwinds give us more focus on that it isn't a soft landing. It's a hard landing coming later down the line. This is truly how the markets can be difficult, right? Not always just making the logical move, or for some, you're just following the price action right now, right? But when I talk about the bulls and I talk to the bulls, what has changed since the beginning of the year? Is it anything in the fundamentals? And a lot of them don't point to the fundamentals. They point to the technicals. And if it's technical that we're just getting the squeeze out of this, well, is this just a big bear market rally? You guys know how I've been pointing towards the kind of the 420 area on the chart. And the big part of me for the 420 is just getting 20% off the lows, right? When we get 20% off the lows, that should trigger a little bit of a new bull market. Just like 20% off the highs sometimes means for us, the bear market is here, right? And I think that you have to start defining the ways that you look into this market. Now, of course, we have been making a big rip up. I've talked about it. As long as we can stay above 400, we're still looking pretty bullish, right? I think as long as you stay above that 400 level, you're still going to have bulls trying to buy the dip. And you're going to have to break now the bulls if you really want the bears to get recontrolled now. So we'll see what happens today. We started to leak a little bit. Of course, this is nothing major. I think it really doesn't get major until you really break down that 400 on the daily. All right, that's going to do it on our outlook here for the overall market. We talked about the first three major reports. We got more conversation coming up. We're going to get to our guests now, but a little bit later, we'll talk a little bit about what's been going on in Nordstrom. We'll take a look at U.S. Steel, at Ford, Gilead, Starbucks. They've been making moves. We'll also take a look, of course, of what was hot and what was not. And if you want to find out what swing trade I'm in, stick around, team, because I'll let you guys know. All right, let's get out of the overall market. Let's get to our interview today. Just want to give you guys the outlook of the interview. We're going to talk a little bit more about what's going on internationally. So if you guys have a question in the chat and want to talk about it, now's your opportunity. Don't forget, right here on Benzinga, your competitive advantage is that you guys get to ask the questions also. I got some. I'll go through it with my guests, and then I'll look to try to grab one from the chat. You guys smash the like out there. It's good to see you guys in the chat. We got Jonathan, Beach Bum, Kenneth, Ryan, Aaron. What's going on, team? What are you guys taking a look at? Let's get to our interview. We got Joe Lange, General Manager, Dow Jones Risk and Compliance. It's good to have you on.
Hi, Mitch. Great to talk to you today. Thanks for having me on.
Yeah, it's exciting times right now. Of course, we're going to talk about some stuff that might not be the most exciting, but the markets have truly been moving around and definitely causing talk out there. And it seems like, a lot of people are on both sides of the fence. So we're going to talk a little bit about what's going on more in the international situation and how that could apply to the markets, right? So we're getting really close to the 1-year anniversary of the Russia invasion of Ukraine, right? And I really want to know, what are the impacts that some of these sanctions are truly having on Russia, and what should we expect in 23?
Well, I think we saw an evolution over the last year of the effect of the sanctions. There was a huge spike at the start of last year, 57% increase in the number of sanctions that were put out by governmental authorities, mostly in March and February. That kind of carried through and obviously had its impact on businesses, individuals that were sanctioned. There was a lot of movement of funds around from oligarchs, shifting their assets, moving their assets to their children, etc. But the real impact, I think, that started to occur recently has been around the oil price cap that's been put in. So we have sanctions that are put on individuals and put on companies, but then there's sanction policies like the oil price cap that came in December, which set the oil price at $60 for Russian oil. Now, with Brent crude at $83 and the Ural crude now trading underneath the $60 mark, the impact has not been as severe in relation to that price yet. But you have seen exports really drop considerably. Russian exports make up 10% of global exports, and they dropped by 25% from December into January. And that oil price gap and the paradigm around it is definitely going to be interesting to watch.
Definitely. And I mean, one of the things that we've clearly been watching for is kind of how the supply chain disruption really happened, right? And what really is going to come out of this? Will we see some more supply chain disruptions coming out of this? It seems like we're trying to do everything we can to affect the supply chains of Russia, but are we really having an effect?
Well, it's changing the paradigm of the supply chain. I think, there's a global trend around geofragmentation, fragmentation of the supply chain, and also, who's trading with who. And I think what we see with that oil price paradigm is that initially, the cap means that you still can buy Russian oil, but you have to buy it for under $60. Now, the reinsurance paradigm, the insuring of that oil, had a big effect on the 1st of January when the reinsurance market started to enforce that. And you're going to see on the next week, on the 5th of February, when refined oil is also blocked. Where does all this activity go? And a lot of it moves underground. And so the supply chains change, trading partners change, and obviously those who trade with Russia and those who trade with the US, that throughout 2023 is going to be a decision. And new supply chains are developing as a result.
Excellent. Now let's transition over a little bit into U.S. and China relations. It seems like we continued to push by the administration to restrict access to semiconductor chips and increase push for deglobalization. It seems like supply chain issues still can be showing up. How will this approach and the shift in policy play into investments and further tensions down the line?
Well, I think that's a great question because it's something that overlaps into the sanctions paradigm. As we see, 2022 is the story of Russia. 2023 may be the story of China, and I think most financial institutions and corporates around the world are really looking to, in a way, map out what their strategy is in relation to China, and if a similar conflict were to develop, how would they manage a sanctions paradigm around that? I guess the other side is that we've already seen, as you mentioned, the semiconductor piece, but also you had legislation that was put in force last year, the Uyghur Forced Labor Prevention Act, that came in force in June, and between June and the end of the year, there were over 2,300 seizures of goods coming in from China by the Customs Border Protection worth a value of $740 million. Now, those aren't actual U.S. sanctions, but they're specific trade legislation that's coming in, blocking all goods coming from the Uyghur region related to that legislation. I think you'll see a lot of similar trade pieces coming out in that vein throughout 2023.
Yeah, it seems to me like, we keep doing more and more to battle in the semiconductor chip, but we really haven't seen a true answer from China on this. Do you expect to see some increased tensions in there? Maybe China battling back on some of our goods?
Yeah, I think those type of retaliatory measures could happen in various different ways. There's anti-sanctions legislation. There's also further trade barriers. Obviously, everyone was hopeful of Blinken's visit, but obviously, I think just a few hours ago we heard that will likely be canceled because of the balloon issue. And
Yeah.
so there's I think it's something to watch, and obviously something that all global corporations and banks are definitely keeping their eyes on.
Any comments on the balloon?
Well, I think you can see how an incident like that can obviously derail the discussions that are happening between
Yeah.
officials, and that obviously is will play itself out in relation to the normalizing of Chinese and U.S. relations.
Now, one concern that has been a concern of mine, and I think a lot of investors were concerned, especially last year, we'll see if it kind of still goes on this year, is the concern between escalation between China and Taiwan, right? And how that could have an effect also on semiconductors and the technology sector overall. What do you think here? Should we be concerned about this?
Well, it's I think it is concerning, and I think from a sanctions perspective, as mentioned before, I think as we saw how things played out last year and
Hmm.
how intertwined the Russian economy is with the U.S. economy, and how we decouple the business that we have with major countries that we're invested in, the unraveling is enormous. And I think we've seen of the companies that have said that they were going to come out of Russia. I think there's a statistic that came out that only 9% have now. So it it is one thing to set these sanctions. It's one thing to also come out of a particular country. China would be on another scale. It'd be potentially a a 50x or a 100x in relation to Russia. And so it's something that I think organizations are mapping out, but obviously also hopeful that the rhetoric can be reined in. And obviously, what you saw just a couple of weeks ago in Davos, the trade minister of China, welcoming people back into the country, and that type of rhetoric is obviously good for business. The rhetoric from today is a different matter.
Definitely. Now, last area that I wanted to get into was international banking systems and the pressures that they're going through right now, dealing with the macro situation, right? It's not an easy one right now. And I remember just a while back, all of the kind of the issues that we were seeing from Credit Suisse. What do you see out there with the issues with international banking systems?
Well, that is something that we look at very, very closely with our work on sanctions data, and also helping banks to ensure that they're complying with anti-money laundering standards. And so the banks are right on the front line of ensuring that the policy that's implemented by or instituted by the U.S. government, the EU, and other sanctioning jurisdictions, other regulation bodies is enforced. And it's important for them to protect their reputation as well. But it's a challenge, and so they have to ensure that all of the customers that they're onboarding are checked against data, that also any of the transactions that they're sending around the world aren't being sent to sanctioned individuals and entities. So that's a real challenge. Obviously, during the crisis last year, we saw the Russia cut off from the SWIFT system. But I think just this week, there was an announcement that the Iranians and the Russians have created their own bilateral networks, messaging networks, which complicates things further. So there are increasing challenges for banks to ensure that they're staying on the right side of the law.
One last one, Joel, because I can see that you have such great grasp of risk and compliance. I wanted to hear your thoughts on cryptocurrency.
That's obviously a hot topic, and something that that has had a bit of a tough 2022, to say the least. I think that's probably an understatement. I think for those that are obviously active in the crypto space, I think there's a welcoming of regulation to ensure that that ecosystem is something that's secure and can be trusted. And I think those that believe in crypto, that want to invest in crypto, regulation can be good in that regard. I think what we see also from our banking customers is that they want to understand the risks associated with virtual asset service providers, and that they ensure they know who the good ones are and who the bad ones are. Now, the bad ones are being listed on sanctions lists as well, right? And we've seen not only the names of and IP addresses and wallets coming onto sanctions lists, but also the recent Tornado Cash incident, where you actually have a mechanism in itself being sanctioned, which is somewhat of a new phenomenon. So it's clear that regulation is coming there, but regulation in that sense can be a good thing, because it'll bring more integrity to the system and more confidence for those to invest in crypto.
Yeah, it's kind of hard to have some certainty if we don't get that regulation, right? I think it's something to keep and watch. We'll see what happens. Appreciate you coming on, Joel. Any comments on that last one?
Well, no, it was great to be on with you, Mitch, and
yeah,
and have a great rest of the show.
Definitely appreciate you coming on, Joel. We'll definitely bring you back on. We talked about Russia, China invasion, China relations, and how that's going to keep expanding. And of course, the banking systems, and appreciate the comments on cryptocurrency. I know so many out there that are seeing the little bit of run that we're getting in the markets, wondering if cryptocurrency will run again, and regulation control out there is definitely on a lot of people's minds. Thank you for coming on.
No problem, Mitch. Thank you.
All right, that's going to do it for our guest today. I hope you guys enjoyed us taking a little bit of a step back, talking about the international environment right now. Let's get back to the markets. The SPY still on a little bit of a leak from that 416, right? It's not elevator moves down, though. That's one thing I do want to point out. If it was elevator moves down, well, you guys might see me get a little bit excited and take some more trades, right? So for right now, it feels like we're on this big stair step up, but we're not getting the whoosh down, right? We did get a little bit of a whoosh in this morning when that pre-market number hit, but it really wasn't the big breakdown, right? That's what the bears are looking for if they're going to come back in this market. It's just a slow leak down. That's not what they're looking for. They want big candles showing up on the 15 and hourly to the downside if they're going to come in here and start trying to hit. We'll see what happens in the overall market. Let's keep going, guys. You guys out there, smash the like. Let me know what was on your radar. I'm going to go ahead and get into, of course, some other topics. We'll get into the rest of the earnings reports after what was hot and what was not. Let's go into it. Let's see where the market is moving right now, what stock market movers truly is all about, right? All right, let's get towards that. What was hot and what was not. All right, so we take a look here. For a while, when we first started coming in, what was leading the day? Well, it was energy and it was consumer cyclical, and I also saw technology up there, right, in the green. Now what are we seeing? We're seeing financial services up about 0.16 from the open. Then we're seeing technology slightly up, but you guys can see it. This is kind of the opening levels around here. If it comes back through these levels, it could easily be right back down into this kind of little gap. And industrials in the red now. Utilities deeply into the red. Real estate also in the red. And seeing a lot of red action now starting to show up from the open. Let's first go to those technology names, start seeing our leadership. How's that trading? Well, Apple, still strong. Apple's just strong, strong, strong. We'll see if this turns around, but I'll tell you right now, I'm not going shorting on Apple anytime soon. Microsoft, starting to break down a little bit, right? This was one that I wanted to really keep my eye on because their earnings outlook and their guidance forward was not great. But yet the stock's been getting a big lift. Will it come back and fill this gap? If it does fill this gap, will this be the start of the downturn in Microsoft? Of course, we came back here towards these highs, coming back like we wanted to get into the trend again, the long-term trend, the weekly trend, and now we're starting to reject it a little bit. If Microsoft can hang out at the 270s, it's going to be looking good. But if it starts rejecting here from these highs, especially 265, now 264.60, seems like 265 acting as resistance right now, we could get a fill in this gap on Microsoft. Then we look at Google, right? Google's been strong, pulling back now. It didn't get back to yesterday's closing price. Yesterday's closing price was 108.80. We're back down towards 105.33s. If we get through after hours lows, that's where you got to be careful on that Google. It could start coming down. That's 101.63. Until that, I think it's still kind of in the bullish as you're climbing the wall of worry. Stock gets hit, it climbs its way back. We'll see if it's able to hold on. All right, keep going on the technology names. NVIDIA has been so strong. I'm glad that I was talking about this 193 as being a bullish area. Of course, this was kind of the inverse head and shoulders area with a neckline. We went above the neckline. We pulled back, and it talked about if we could get back above that 193 and really close above that, you could push back towards high. Now you're back towards 212. Look how also you're holding the 9 EMA pullbacks. That just shows us momentum. It's still in the favors of the bulls. We're going to look to see when the 9 EMAs, when the price action starts closing below the 9 EMA, that's when really I'll start looking for turnarounds. That hasn't happened yet. A perfect example is on like a stock like Tesla. Look at the 9 EMA. It's very extended away from that. That's the 9 exponential moving average. I'm looking for those kind of levels to break first before we would get some kind of reversal action. All right, let's keep going. Industrials in the red today. What is in the red today there? Honeywell. Really nice day yesterday. Climbed the wall of worry, but coming right back down. This is where you got to be careful on names like this. We don't know exactly where they're heading. And Cat bouncing back. That's just how confusing this market can be. Came back towards around the 245, bouncing a little bit. I'm going to keep my eye on like a deer that really kind of broke down from around the 626 yesterday all the way back down towards the 405. Will it come climbing back? Something to keep in mind. We'll see if it gets back there towards the 420 area. But if it lets go of this 405, it could keep coming back down. And if both of these let go, look for maybe Picard to come back down fast, as it's been hanging out here on the daily chart and could easily just pull back. We'll see what happens there. I know that I've been watching GE, so I'm going to just take a look at that. That's starting to turn around a little bit. Multiple tops in the 84s. Are we starting to get a little bit extended? Could very much be. This ITW, we talked about it yesterday. Would it fill the gap after breaking out through the 234? That was the level we were looking at. We'll look to see if it comes back towards the 240 level on ITW. All right, catching up with the chat. What's going on out there, team? If you guys got a stock or a ticker that was moving and want to talk about it, throw it up. We'll get to it. All right, let's keep going from the industrial trade. I know the airlines were something that we were watching for a long time, so I just wanted to take a look at like an AAL. Look at that. Oh, it held that 16 pullback, never coming back there on that one. I'm looking for these, but these airlines just seem to hold right now. DAL continuing higher. Even Love not doing too bad. We'll see if this one can get back up there. Not my favorite, right? I mean, it's definitely not the favorite right now. But UAL had really good earnings reports, and it's up there towards 51.19. We'll look to see if it can get to 52. It's not a bad area. I've been waiting for a pullback in airlines, but they just stay strong right now. All right, let's get out of the industrial area. Consumer cyclical, department stores moving on there. JWN, let's talk a little bit about JWN. Of course, this stock moving on the rumor out there. Well, not rumor, or the actual news, but it was given to Wall Street Journal. Let's talk a little bit about that. Nordstrom shares were trading higher off a Wall Street Journal report that said GameStop's chairman, Ryan Cohen, bought a stake in Nordstrom. And I think it's interesting also. I was reading an article on CNBC, and we won't get into that, but Cohen, who founded the pet retail health site Chewy, considered a champion of the meme stock crowd. That's what CNBC said in their report. I'll tell you right now, I don't think the meme stock crowd feels that Ryan Cohen is the champion. If anything, he's probably the opposite, right? I mean, let's just be honest. He's the antagonist. He's the enemy of the meme crowd because he's been selling it to you guys like easily. He's just been taking the money and run. And in this case, you might just do the same thing, right? Take the money and run. He already got a 30% pop. Why not take the money and run? It almost feels to me like this is really, really kind of against shareholders' opinions. And really, this is why I also stay out of GameStop. I'm not short GameStop, but this is why I also stay out of GameStop, because that chairman, I wouldn't want to be a part of any company buying that if he's the leader. If he goes, maybe I can go after GameStop. But Ryan Cohen, by all means, I don't want to follow you, man. Not the way you're going, not the way you're doing, and the antagonist in my eyes to the meme stock crowd. All right, but we'll get out of that. We'll get through that. I hope for some reason they come after him, right? Because I don't think this is right for investors, but that's a whole nother conversation. We'll get out of JWN. We'll take a look at some other stocks to see what's going on. Let's keep going and what was hot and what was not. Utilities definitely getting a big hit today. We'll see what happens there. Real estate pulling back. Utilities really kind of starting to crack, so just be careful on those if you're long on that. I've been trying to short Duke for so long at the 105s, back towards 100. This was a trade. I just kind of missed it by just a couple of pennies as I got stopped out in the 106 range there for Duke. We'll see what happens there. Starting to come down, starting to break. We'll see what happens to these utility names. And energy going down a little lower. This is my swing trade alert of the day, team. I am swung short on ExxonMobil. I did get stopped out earlier in the day on this, and then I went after it again. And the big reason for me is I'm looking for these to start breaking down. I got 113.38s now, looking to hold towards the 114 daily level, 114.58 to be exact. That's the highs over here. I want to start seeing this break down. A close back below 111s would look really good. I'm up over $1 on this, but going to keep letting it work. This is a swing trade, right? So I can let the trade work. We'll see if it comes back down. And for this being mentioned, let's take a look at the XLE. This is another reason why I'm going after it, as this one looks like it topped out there in the 93s and has turned around fast to the downside. Will it start to break down here? That's one thing that I'm looking at. And I might be a little bit early on this trade, but I'm going to take a shot. We'll see what happens. All right, we'll see what else is going on. Reborn King the Duel. Censorship in the comments, surprise. Citadel bought GameStop's whole float. It was a trap. That's a whole nother can of worms there for the GameStop action. You should sell on whatever. We don't promote. I don't promote anything. You guys, you literally see me talking about it right now. If anything, I mean, I remember when we were getting into that GameStop situation, we tried to uncover that situation, Reborn. But if you want to go back, look at the videos yourself. You let me know what you saw there, Reborn. All right, let's keep going. We'll take a look at some other areas. Energy coming down. You guys know I'm taking the swing now. We'll see if this plays out. There's some other trades that also look like they're starting to break down. Like Chevron gave me a little bit more of that signal, right? We'll see if that can continue breaking down and coming down towards the lows. Oxy overall doesn't look the strongest either, right? Look at this long-term trend that if you break, I feel like you could keep coming lower. Now we're starting to break that at 62. Let's see if we make a move to 60 and 56 after that. All right, that's going to do it for the energy talk. We're going to keep moving. Let's go to some of these earnings reports, right? Let's go to the next earnings report, getting out of what was hot and what was not. Let's go to U.S. Steel. X going to give it to you. He going to give it to you. We'll take a look here. U.S. Steel up there towards 30.34. This is a stock that we've been watching. Really, I mean, we've been kind of keeping a close eye on this. This was created on the 6th, that line right there. Why were we watching it then? Well, a lot of that was Cleveland Cliff. This one started the move there on January 6th and started pushing strong. I'll show you guys that move right here. So this is that kind of period right now where it started getting me to look at steel. Cleveland Cliff came out with prices on steel and raising their prices. That gave me some insight to maybe keep this one on my radar. And then Nucor started following it also. Look around the 6th, right? So I'm drawing circles on that day. And you can see how it all started reacting from that day. And it was off Cleveland Cliff. Steel Dynamics has been such a monster, right? Look at the 6th on that day, right here. Boom. We started trending back, started coming back into the trends and really pushing strong. We'll see what happens on these names, right? X continuing to push. There's some other ones we can watch here. So we'll keep an eye out on these, right? Can they continue making the lift? But steel, not a bad name to kind of keep on watch. Look at this RS, Reliance Steel and Aluminum, continuing higher. We'll see what happens. There's been a lot of this kind of spike here in the commodities, and I'm a little bit concerned. Been keeping my eye on like kind of lumber, of course, to see what happens there. We got the ticker WFG that's been on an absolute tear, now pulling back, but something to keep on watch. Will we get some of these kind of basic materials to spike again? And will that bring some inflation back? All things to keep in mind, right? All right, getting out of U.S. Steel, let's go to Ford. Ford was an important catch today. And what I want to do on Ford is kind of give you guys an example of what we do on live trading, right? I want to show you guys what we do on live trading, right? We do this all the time. We go through lists, we go through trades on how you guys can catch the moves, right? Well, I just put out a recent outlook on how we traded kind of the Ford, right? I'm going to go ahead and reshare this here so you guys can see this and kind of hear this. Just give me 1 second. Got to reshare it here. All right, there we go. All right, so you guys can listen to this video. I'm going to rewind it for us. It's just about 48 seconds. This morning on live trading, we were looking at the move that was going on in Tesla and trying to apply it to Ford. Why? Relationships, right, team? Let's hear it here.
We're actually seeing some flow since the market opened here.
Nice.
More Tesla calls here. Looking at the February 3rd. So those are the ones that expire here today. Also looking at the ones that expire next week. So Feb 10, Feb 3rd, and Feb 17 expiries here on Tesla. Looks like they're sweeping those up across the board. Tesla continuing to push those highs.
All right. So if you're thinking about that, will they climb the wall on Ford, right? Ford earnings coming in here, hitting it. Will they climb the wall? Of course, the earnings weren't the best. They didn't really look like good outlook, but here you guys see it. It's starting to at least bottom out around the 1280 levels. We'll look to see if it comes back through 13. And if Tesla stays strong, maybe you get that move. GM also is in the green. That's one thing to note. So Tesla and GM are in the green. Ford in the red will start making its way back.
We're actually seen some flow since the market opened here.
Nice.
More Tesla calls here. Looking at the February 3rd. So those are the ones that expire here today. Looking at the ones that expire next week. So Feb 10, Feb 3rd, and Feb 17 expiries here on Tesla. Looks like they're sweeping those up across the board. Tesla continuing to push those highs.
All right. So if you're thinking about that, will they climb the wall on Ford, right? Ford earnings coming in here, hitting it. Will they climb the wall? Of course, the earnings weren't. All right. Let's talk a little bit about that and what happened really there in Ford, right? Well, guess what? It did climb that wall of worry. You guys can follow me definitely at Money Mitch BZ, but take a look how Ford climbed back up. We went from those 1280 area right back up through the opening price of 1315, all the way up there towards 1360. That just shows the buy the dip mentality that's out there right now. And it's strong, right? I mean, we clearly see it. The only question there, of course, is will it turn around? All things to keep in mind. If Ford closes lower than that after hours 1305, that will give me a sign also. And as you can see, it is starting to leak a little bit and continuing to leak with the SPY. Now we're down to 411.92s. What was the level I gave, guys? It's the 410 area, right? And going through that pre-market support around the 410.84s, will we get through that level? That's really when you're going to start seeing maybe a continued downside action. Right now, I still think the bulls can just come back in here and just drive it back up, right? We'll see what happens. There's so much that could turn around here. And we've been on a big run. There's nothing wrong with getting a little bit of a pullback. Really, the only time that the pullback is going to get concerning for me and for the bulls is that 400 breakdown back down. If you don't get that, you could easily just reject off of this. And this is 50% retracement, right? 50% retracement of the recent move from the top to the bottom. We got two. Do we reject from that 50% or do we get above it? Something to keep and watch, right? That's around the if I had to put it to an exact spot, around 414.50. We'll see what happens there. All right, let's get into the last kind of headline that I wanted to touch. Let's go to Starbucks. This has been an absolute monster. And I want the chat to let me know. Put a 1 if you guys have been to Starbucks in the last year. I see a lot of you guys out here right now. I want to hear who's been to Starbucks in the last year. And as much as I wish I could say a no, I have to add a 1 because I've been to Starbucks in the last year. And that's just how it is, right? I feel like a lot of people don't like to say that they go to Starbucks every day, but the truth is they end up wanting their coffee, right? And $7 coffees get expensive. Gary J saying a 0. Interesting. Kenneth said, not me, not ever. Well, glad, man, glad. Save that money. Bustelo all day, says Gary J. Yeah, I love Bustelo. I mean, but I'm not going to lie. I'm a little bougie. I like my Starbucks creamer for my Bustelo. That's the hard part there. But there's some 1s coming in. Neil saying a 0. It surprised me literally that there's not so many reactions towards the Starbucks. But look at the move that Starbucks has had. They say there's no such thing as V bottoms. Well, I don't think this was a V bottom, more like a W bottom. But man, what a drive back in Starbucks. And at least if you look at it on the weekly outlook, right? Does this look like a head and shoulders at the top? Yes. Does this look like an inverse head and shoulders at the bottom? Yes. Well, now we know how Starbucks likes to reverse, right? Likes to come up to the top of the range, to the bottom of the range, back to the top of the range. Will it come back to the bottom of the range? Something to keep watch on. Really, 110 is an important level for Starbucks investors. It looks like you couldn't get through there, couldn't get back to that prior price action up here. So we'll look to see if we get back above the 110. But Starbucks has been an absolute monster. And for that case, it even got the Dutch Bros going again, man. The Dutch Bros. You guys know I'm a big Dutch Bros fan. I haven't had it in so long. I kind of missed the coffee. I think they're way better than Starbucks. But the Dutch Bros, we're going to get the bros to come back in this environment? Who knows? Who knows? But I'll tell you one thing. Long term, I do like Dutch Bros. They're going to continue to grow. They only need to change up their franchisees so I can buy one and open one here. But we won't talk about that. Let's keep going. We'll take a look at some other action. Grab your mic with your hand. Testing, Kenneth. Testing. All right, we can keep going. But I do love some Mickey D's coffee. Yogi likes the Mickey D's. I'm going to stick with my Dutch Bros. It's a little bit better. Oh, and if you got an espresso machine, Neil, I'm coming to your house. Duncan, that's not the worst, at least. All right, let's get out of Bros. We can take a look back into the market. Are we still in the league? Looks like we got a little bit of a bounce there. Went down towards 411.69, and just as quick, seeing the dip get bought a little bit, right? We'll see what happens. I'm not going crazy in this market. I'm just taking it easy, team. Some people are really trying to kind of fight the action. I'm not going to fight the action. I'm going to just listen to what the market tells me, right? Right now, the market is telling me it's in full bull control until we get through the 400. That's what it's going to be in for me. Right now, we're at 413s. We could still kind of get green on the day, right? I mean, the open on the day, 413.25s. We're at 413.11s. This could still turn green by the end of the day. So be careful out there. The Bears, the Bulls are in control right now, and they can keep riding this thing up. One stock I say pay attention to also, Meta. Meta, I was looking at this move. I was thinking about even riding it. I even got some of this move here on the first pop. I got some of that move when it popped up here. Then it eventually faded right back down. Will this come back towards the close and start pushing back towards 194 or 195? We'll see what happens if the buy the dippers come right back in and start pushing things back up. Snap. Horrible report, right? Well, look, it started to even try to come back, right? Look where it's at. Got hit, came back, holding that. It just goes to show us if Snap isn't going to come down, well, the market doesn't want to take anything down right now. Seems like it. All right, it's 1:53. We're going to start wrapping up here. I'm going to give one last moment for you guys to throw up some stocks. Ticker time here. If you guys got any ticker you guys want to check out, go ahead and throw it up. If not, I will go ahead and start wrapping up. Random fact, the caramel macchiato was invented by a customer. Actually, if I'm at Starbucks, that's probably what I'm getting, a caramel macchiato. Had some Bros. It was awesome, Yogi. Yeah, Bros is not bad at all. What I like about Bros is they don't like to make it too pretty. Bros is just about come up, drive through, get your coffee, get going, right? It's not more of a let's hang out, have a big retail space. No, they don't need all that. They're just trying to give you your coffee, let you go on about your day. All right, Franklin, even though I don't mind, I don't like all the spamming. I got you, Franklin. I'll get to NIO. We'll get to it right now. Let's go through some of these. I'm going to run through them. We'll talk about them really quickly. I'll try to give some levels. Like always, you guys make your own investment decisions. Let's start running through it. David was the first one up, 153. He got it in. KPLT, Catapult Holdings, right? Software name, right? A lot of bottoming on this. Needs to hold the $1. Got back above the $1. Why do stocks need to hold the $1? Compliance, right? They just need to stay in the exchange, right? We'll see what happens on this one. It has been trying to get back above this 110 multiple times. 5-star area. Needs to get through it and start holding there. Another thing you want to see is increased volume. Is the volume coming in this name recently? Look right here. This doesn't make me feel so confident. I would have wanted to see a huge spike here like we see over here in this price action, right? And so not what I wanted to see, right? This actually got it going. This is where I think the bulls are hanging on right now from the 75. That's the brand new, kind of the new year, right? January effect. But it needs to keep growing. It needs to keep finding buyers through that 110. If not, it can easily turn back around. AI, let's go to that one. That one's been an absolute monster, has not wanted to turn around. And this is why you don't always just short stocks that are ripping, because you never know where it's going to stop. And I was talking about AI way back here, team. We were talking about this. I created this line on December 8th, the 1360 line on December 8th. And we were looking at this one. Why? because we were looking at this one because the AI ticker. And I was already seeing the focus of AI and chat GPT, right? Well, that's why I was talking about that AI could make a move just from the ticker name itself, not having anything to do with the company. That's exactly what's been going on. And you can't run in front of a train. That's a train right now. You don't want to run in front of that. You can easily get run over on a stock like AI. Right now, levels to continue going higher. Well, let's go to the weekly, see what we see on the chart. You can see how we bunched up in this area. I'm going to draw this area over here. That's around the 28.65. From there, after that level, I think we could get towards 34. We'll look to see if we can continue riding. But this one has made a monster of a move. And eventually, I think comes cracking back down. Like always, you got to be careful out there, team. The sexy word right now is AI. Anything with that could get moving. Lucid, Lucy was actually moving. That's a penny stock more, but Lucid trying to get back up there, right? Talked about it on that day that it popped up. I don't know if you guys were watching, or Franklin, you were watching when this popped. I was actually watching the action the whole time. I still remember getting it through this. It wasn't up to 1673. And I was like, if it can get up to 1673, get to the 17 handle, I might want to go short, but I didn't want to do it in front of you guys. And I think that that's when I need to sometimes understand that the exuberance, sometimes you got to take at least a little shot, right? Well, hindsight 2020 now, we're back towards $11.77. Will we get another pop above 13? That's the level I think you're watching if you're a lucid dreamer. And of course, this will all depend more if the rumors become news, right? Well, this one popped on a rumor, and really quickly that rumor got knocked to the side, and you're not seeing that appreciation, not seeing that run back immediately. I think you would want to see at least this hold the hourly levels of, so you got 1172 and you got a next level of support around that 11. It needs to hold 11. If 11 goes, I think you're right back down below 10, and you could easily be back into the $9 and $7. All right, getting out of Lucid, let's go to GE right quick. You guys know that I actually shorted GE on a swing trade, was able to make money on this move right here. There's not many people that are making moves on shorts right now. The big thing for me, you have to time it perfectly right now. If not, you can easily get caught, right? Well, we played it on this downturn, got out before we got back in it, right? Before it kind of stopped us back to break even, took the profits and ran. Now you're seeing tops around 84. And so that's going to be your next level that you need to get through. Can it get through here? Eventually, I think this one pulls back. Is it going to have a massive pullback? Yeah, I mean, it could pull back to like the 70, 75. I don't see it coming back to 50. And so I'm going to be looking for pullbacks in GE to get bought up. But I could also try to take it down there towards the 75 and 70 level. Looking for pullbacks in this one, as it's just run way too far. This one essentially has been running since 12/16, almost 12/18, my birthday, but should have just bought it GE, right? 37.27%. Big move there for GE. All right, I'll do NIO for you, Franklin, so you don't kill me. I see enough of those NIOs in there, but it is what it is. Let's go. NIO turning back around towards the 1128s. This is why I'm also focusing on what? On Tesla. Because if NIO is not going to do great, well, I think Tesla comes right back down. And if you look, Tesla's been starting to crack since that kind of 199, 198 area. I've been wanting to go short again, Tesla, and try to take it down. I made money on it this week, but do I go after it again right here? That's where I'm fighting myself a little bit. Don't want to give up the gains that I had this week. And I can say to myself, yeah, there's a little bit of hesitation there in shorting a monster move like Tesla, right? We'll see what happens on that one. If I did take it, I would risk off that 96, 98 area, or maybe just a 200, but you have to give yourself the risk and return that makes sense, right? We'll see what happens there in Tesla. All right, catching up, you guys. I hope you guys appreciated me taking a little extra time there on NIO. You just got to be careful. If Tesla turns back down, I feel like NIO goes right back down. Look at also LI, right? LI has been making a nice run as of late. If this starts coming back, Tesla starts coming back, easily are closing this gap here towards 25 and could continue coming right back down. XPEV doesn't look strong either. Started coming back. It's trying to get through this kind of trend line towards the top side here, towards 11, but easily could be right back down towards the 950 support. Watch that area to see if you crack it towards the 9. All right, that's going to do it for me. Like always, I'm here for you, amigos. Everybody out there, Franklin, I'm here for you. Anything you need, my friend. All right, that's going to do it for me. Mullen, Elon's drinking buddy. Just ask Elon what he thinks about Mullen. Ask him what he thinks. Has he driven one? Has he rode in one? I don't know. Elon's been something else, right? I did see him make a decent move in Twitter today. Don't know if you guys saw, but he's trying to pay creators now. So he's trying to figure a way to make some revenue for Twitter. And who knows? Maybe Tesla keeps going, right? You definitely don't want to be fighting. Always know your outs. Always know your risk. Clear example for me is when I did short Tesla this week, I cut it into the profits, not fighting the tape, just taking the money and running, right? We'll see what happens, team. Smash the like button. I will see you guys on At the Close. That's going to be coming up at 3:30 Eastern, right here on Benzinga. You guys don't got to go anywhere for more action. Benzinga has it all for you. And of course, we'll see if this market can come back roaring, or do we break the 411s today? Find out and check us out on At the Close. Joel Elconin and I will go through all the market. Any ticker that you guys want to take a look at, I'll see you guys at 3:30 p.m. Eastern, of course, at the Close. Smash that like. I don't get Amazon. Barely makes money, and analysts love it. Jay, they're not loving the fundamentals right now, right? Even the analysts are getting what? They're getting price target happy. They're just looking at the price action and just trying to follow price action. I mean, it's kind of common for the analysts to do that, but we won't get into that conversation. Smash the like button. We'll see you guys a little bit later on At the Close.